Good morning, guys. Good morning, good morning, good morning. How's everybody doing? Somebody give me a sound check. Let me know if you hear me okay. Let me know if the video is good. Say yes in the comments. Let's get ourselves started here. All right, I see the stream is live on YouTube. Are we good? Hey, Peter, good morning. Zoltan, good to see you, my friend. Hi, guys. How's everybody doing? Happy belated 4th of July to all the former colonialists who celebrate. I saw the funniest tweet yesterday. Somebody said, name the greatest thing about Britain. And somebody replied, it created more Independence Days than any other country in the world, which I thought was kind of funny and kind of true, too, by the way. So anyways, UK had an election yesterday on July 4th, Independence Day for US. Labour blew out the numbers. Which is very interesting because it's the only country in Europe that's going center left, whereas everybody else in Europe is going center right. But as many of you may have seen on my Twitter feed, I said, what's interesting is look at where Reform, which is the center right party in UK, is going to print. Now, they came in, I think, at around 18% of the vote. Because of the way UK distributes its parliamentary votes, they only got about, I think, 12 seats in parliament. But it's interesting because I think there's a populist streak in Europe that's really starting to imprint on all the governments. The French election obviously is going to be the most important, and we'll see how things go from there. We already have a center-right government in Italy. If we have a center-right government in France, perhaps one in Austria. All of those things are going to, I think, radically change policy. Hard to say which way. It certainly feels like Europe might become less regulatory from a market perspective, and perhaps more free market oriented. We have complete mayhem in the U.S. elections, as many of you may have been following. For those of you who are not this side of the Atlantic, let me just give you a little bit of a rundown of what's going on over here, because all of these things I think are going to really imprint on where the markets go over the next couple of months, and much more importantly, go forward. So on the U.S. side, there's now very, very serious medical doubts about the viability of the current president. President Biden has been under a lot of pressure to withdraw from the race. However, there is no legally good way to do this because he's already been nominated as a nominee. As a matter of fact, I think there's 3 or 4 ballots, 3 or 4 states on which ballots his name can't be changed. And also politically, it just creates a whole free-for-all in the party if they sort of throw it out to everybody. So conventional wisdom now is that Vice President Kamala Harris is going to be the presumptive nominee. But I think to really have any chance at all for the Democrats who are running like around 5-6% points behind Republicans. Remember, in America, if you're 5% down in the general vote, it's literally like you're annihilated, because in America, it's not a vote for majority. It's a winner takes all in every single state. So if you're running even 1% ahead in every single state, you literally win every single state. It's like, all you have to do is just be 1% in every state and you win 100 to 0. So that's not the case. But the point is that 5% spread. American elections sometimes, generally over the last 20, 30 years have been like 2% spread, 1% spread. So 5% spread is massive. This is what former President Trump has opened up as a lead. Now, she actually runs, I think, only 3% spread against him in the latest poll. But to me, it's going to be a lot of interesting chess going on here, because the only way I could see Democrats coming back essentially from a very disastrous debate is if Biden actually resigns and she assumes the presidency. Because if she becomes the president, the whole narrative changes radically. You have the first woman president of the United States of America. She now acts as president rather than as a candidate. It creates a whole bunch of interesting dynamics. It also creates a new set of debates against Trump, where she is hopefully going to show a little bit more mental acuity, although all bets are off when it comes to U.S. politicians on that front. Anyways, it's going to be interesting. I think what everybody thought was going to be like a sleepy summer It's going to be kind of possibly a very volatile political situation, which may translate itself into a kind of a volatile financial situation in the markets. Now, when it comes to markets, the single most important data point, and I think you're starting to see, the little bit of a move in the markets ahead of time that we saw this week was the ISM print, which happened on the 4th. Where do I go? Previous? I guess we'll go to previous. Where did I go to? I'm trying to see if I can go backwards on this thing. Hang on. Time to put on my glasses. Sorry. Wonder if I want to. Where's the calendar? How do we do this? It only gives me a daily calendar. All right, so let's just do Forex Factory. I just want to show you what we saw on the 3rd, which is really interesting. We saw the ISM services here. This is what I want to show you. Kathy and I have been harping for a very long time that it really appears that the U.S. economy is starting to see a slowdown, right? Starting to see a slowdown in consumer demand. You're starting to see that in Kohl's, Starbucks, missed. McDonald's even showed a slower spend. Basically, I think what's happening is the 20 to 30%, the lower end of the spectrum of the workers is no longer seeing those 3-4% income jumps, and prices remain relatively high. So their ability to spend money, their additional dollar, is really being stretched. And it's anybody who's, as I said, anybody who's gone to breakfast in America, diner breakfasts for a family of 4 is going to cost you $50. Like, it's just, you go to Denny's, it's a $50 tab. It's a lot for an average American worker to absorb. So consumption is definitely clearly being curbed. Now, one of the things that everybody was sort of hoping for was that services was going to remain buoyant, like travel, hotels, airlines, activities, Taylor Swift concerts, all those things people were still spending mad amounts of money on. We're starting to see that start to curtail. The ISM services really missed a lot, 4 percentage points on the downside. Factory orders were negative, which is really also, not great. And I think it doesn't have the prices paid component, but the price paid component was still relatively elevated. So my point is, and employment was lower. So this doesn't show employment because this particular calendar doesn't, but trust me, this employment was also lower. So one of the things that we know pretty well is that the employment component of ISM services is generally one of the best forecasters of NFP. It's not by no means a one-to-one relationship. It'd be nice if it was, but it generally, I think, has like a 70% correlation, meaning that it's like sort of 70% accurate, and certainly maybe in a delta, meaning that there is a possibility that we have a lower print on the NFPs than the market expects. So let's see what the market is actually looking for today on the prints. Where are we here? Sorry. So the market is looking today for 160 private payrolls, right, against 229, which is already a much more muted figure. And it could very well be that we're just going to come in within 20, 30,000 of expected. But, and this is where I think it could be interesting, if we print like less than 100,000, right, if we print smaller unemployment, and, God forbid, we print a negative unemployment, because these unemployment figures are adjusted. They're not, one of the things that you have to just take it with a grain of salt is that none of these figures are actual real numbers. They're always adjusted off a sample, and there's always seasonal adjustments to it. There's it's called the birth-death model, where they assign artificial amounts of positive or negative value to the final value, which could actually skew the final value one way or the other. But imagine if we print negative. We print negative. Couple of things I think are going to absolutely happen. So first of all, rates are definitely going to fall, because that will absolutely put enormous amount of pressure on the Fed to begin cutting rates. Secondly, gold, I think, is going to spike. Gold becomes the absolute best beneficiary to the upside. The much more dollar yen goes down. It's got to go down because rates have already been signaling to the downside, and yen is so grossly oversold. So yen is the strongest, USD is the weakest. The North American session begins. Market is already anticipating dollar yen could be 2 handles lower. I mean, we will certainly be looking at dollar yen. Now, I'm not going to, just to give you guys heads up, I'm not going to trade any of the FX in my account because I can't. I'm trading a futures account, and it's just a nightmare trying to trade FX. But I will call FX trades, and you guys are welcome to take those FX trades with me, one way or the other. But I will be trading NASDAQ and Dow and S&P on the future side when we get into it. So feel free to do what you like. But I'll definitely be looking at ideas. The other thing that's going to be interesting is, of course, the story here, Canadian employment change, right? So let's imagine the following story. I'm just playing around because these are the scenarios we might be developing as the news hits. If we get a big miss in Canadian, let's say Canadian employment is also negative because Canada is also starting to really suffer from serious demand destruction. U.S. Canadian data really bad. I absolutely want to short CAD yen. I want to get short CAD yen because I think CAD yen is going to suffer a lot because yen is going to strengthen quite a lot across the board on all of those things. NASDAQ and US 100 are the same. Correct. All right. Before I start, actually, let me just start again. Don't forget our friends at Apex are running 80% off, dirt cheap. I'm just going to put the link in there for you guys to be able to take advantage of that before we start. I'll make sure you get a couple of Apex accounts because I think they're going to run that promotion is going to die this weekend. So make sure you lock them down today so you can trade as many accounts as possible, do lots of different strategies, do lots of different ideas. So yeah, if we get a double whammy, I think I want to trade CAD yen to the downside. I may actually even want to trade Euro CAD to the downside as a cross idea. We'll look at currencies. If we get a big number, we'll certainly jump on a few things to begin with, and then I'll probably trade FX initially, and then we'll trade U.S. Open on the equity side, and we'll trade that completely. I wanted to show everybody before we start. We got about 3 minutes before the data comes out. I want to show you, and let's use the Dow here as an example because it's a good example today. My cleanest, simplest, easiest scalping trade, and some of the things that I just added over the holiday to make it even easier for everybody to follow the trades. So we trade a very simple triple R strategy format for trend, which is first you have trend, then you have a retrace, and then you have a resumption of trend. And this is encapsulated by the following labels on the chart. So this is the beginning of trend. A bright maroon, red is the beginning of a sell trend. The bright green is the beginning of a buy trend. So this is the beginning of trend, right? This is the beginning of trend. Then we have a retrace, which is like this green, green arrow to the upside, right? Or in this case, let's say the second sell label, the green label over here. And then we have the resumption of trend, right? The resumption of trend is like right over here at this level at 635, 635, right? Now, what I've done to actually even enhance that idea is that in a trend, you have lower lows if you have a downtrend, and you have higher highs if you have uptrend. So excuse me, lower highs in a downtrend and higher lows in a downtrend. So as you can see here, the trend as it develops here, this is 35, this is 30, this is 18, this is 14. It just keeps making lower highs, and that allows you to have a lot more confidence to short here. So short here, 10 points, short here, 10 points, short here, 10 points. Really, really clean structure of the trend. I wonder if you guys, please tell me if you guys can actually see these numbers. I know they're a little bit small on the screen, and I made it, by the way, so you could actually, in this latest version of the indicator, you can take them off so they don't bother you, or you can actually show them. I like showing them right now just because it's gonna further give us the numerical, quantitative way of trading trend, trading trend to the downside. Looks like data is coming out. Let's hotter. Interesting. So 4.4, unemployment rate hotter. 4.9. Canadian is 20. Actual Canadian was negative. So Canada is really, really weak. US is kind of hot. So that's interesting. Let's take a look at, we're not going to trade anything right now on the US equity side, but let's look at currencies here. So dollar yen continues to go down. It's interesting. I would still short dollar yen here. I'm happy to short dollar yen here in the 40s, all the way down to the 30s. I think it goes down. And dollar Canada here, to me, it's dollar Canada is not the buy that I want, but I would rather trade. If I have Euro Canada here, or even Kiwi Canada, I would trade the crosses. I would totally get long Kiwi Canada here at 56. So dollar yen, I shorted around 45s, trying to get around maybe 30. Kiwi CAD here, I'm happy to buy this, the 55s, and see if we can get it up to maybe 65 or so on the crosses, because I think this is very, very weak for Canada. So you can see Kiwi CAD is working very, very well. If you guys are long that trade, you can start scaling your way out of that trade. But that should be, I think, good for at least 5-10 pips of really quick scalping here. It's actually, you came in at 53 to 63. Yeah, you're almost at 10 points on Kiwi CAD here. Dollar CAD coming back off the lows. I think that this could be. It's not necessarily. Excuse me, dollar yen. This is not super bearish dollar yen, but I still think it has a little bit of an impact to the downside. So let's see how well it trades here. I'm trying to get to about 30, so it didn't quite make it to 30. So we'll see if that trade plays itself out. Kiwi CAD in the meantime hits our target here of plus 10 on the currency side. So super easy. I would have taken any CAD cross, but Kiwi CAD was as good as any. It's a relatively low volatility trade, so it made it easy to get into the trade off the move. And dollar yen still starting to work to the downside. Let's see if we can get that movement. I'd take like at least half off at around 35. Especially if you got in at 45. Again, you certainly had 10 points of the move here. So we'll let that play out. I would just get flat right now and just wait for a retrace. Now, the thing that's very cool is, I showed you the my indicator for equities, but the indicator certainly can work on FX, not necessarily on the 1-minute chart, because I think FX is too not really conducive on a 1-minute chart. But on a 5-minute chart, we might have some really interesting downtrends. Here, here's dollar yen, for example, all the way through the nighttime session, where you had the first sell signal here at the 76s level, went all the way down to 66, as a nice clean trade. You even had one early in the Asia session where 97 was the first trade, and then you didn't have unfortunately, you didn't have a retrace trade here, so you couldn't have taken this trade, so you didn't have that. But it dropped like 30 points on the move here as we traded. Okay, so we'll let the FX story wear itself out. Let's just see what's going on over here on the data set. Private payrolls were a little bit better. Participation rate, manufacturing payrolls were weak. How was the average hourly work week? So we did gain a little bit in employment, but we did not. Unemployment rate went up. We did not gain much in income, which is really important, because growth in income that doesn't exist is, I think, still negative for equities. Let's see what the futures are doing. Let's go back to the 1-minute chart. Markets are flipping around. And I guess this is interesting. So the markets are essentially taking this as a positive trade for the time being. We're going to absolutely wait, because what I would need to do to really trade the trend component of this is we first of all have to have the buy one, right? We have to have a trend established in both S&P and the Dow before we even sort of felt comfortable. In NASDAQ, there is a buy one. It is established itself as a positive trend, but now I really would need to see a a second buy label and a second move to the upside. I'm very dubious. I mean, this is kind of a knee-jerk reaction on equities, that the economy isn't really deteriorating as badly as everybody thought it was. However, this also allows the Fed to kind of delay its rate hike situation. Regardless, here's what we're going to do. I'm going to go into trade mode. We're going to try to, stick more or less to our structure of, like, if this recaptures the 8-period moving average on a green move, then we're going to go long. Give it the benefit of the doubt that this is a legitimate trend move in the Nasdaq. Although everything else is just turning around. So I mean, everything is turning positive. So we're going to trade the price action, not my opinions at this point. But it's interesting that diversion from where the ISM is to where the government data is. Sweetwater says half the U.S. is probably hungover and low vol. That's very funny. If you guys want to get a hold of this indicator, which is not available anywhere, but you can use it, of course, obviously for trading futures and trading CFDs, but as well trading it on FX as well. Feel free to join me at Pass the Prop Academy. You'll get all this, the indicator, the coaching, all the live trades with me every single day. Oops, I got logged out. What happened to me? Okay, I'm back in. Okay. All right, kind of quiet. Not much going on over here on this. We didn't even look at, where's gold? Gold popped 11. Let's actually look at gold. So gold is interesting. Gold has actually sent us it was buy pre-market, had a huge negative move on. Oh, I know why. Of course, gold had a huge negative move. I'm sorry. I'm like, why am I surprised? It was a upside surprise. Remember, I said if it was a downside. I'm so in the mindset that it should be a downside surprise. It's actually an upside. It was an upside surprise. So gold is actually suffering a little bit here, and had a big dip, moves back up on risk reversal flows, but it's still in sell mode. So honestly, only a sell condition is what we would be willing to entertain here. Actually, let's take a look at this. It's not a bad idea. So we have 19 seconds left here. Let's see if we can make this into a sell condition. Because this is not positive gold. This allows the Fed to delay interest rate cuts. So it's 2 seconds left. Okay, selling. Let's see where we go here. So we're looking for 76.2 on gold here. Sort of trading our, it's negative gold, not quite. It's actually not quite in sell mode here. Oh well, I'm looking at the at the mini. So you ignore how this looks on the mini. I'm just taking the signal on the mini, but I took it off the large contract, which did show us a sell condition. But basically, we're looking for 76.2 against 79.2 stop. Let's see, if this trade works, because we'll, sell in a downward trend, sell momentum over here. Took that trade. Let's see if we get any continuity to the downside here. Showing this to you on the large contract. Looks like we got it. We got the trade. So the trade got down. So this was off. Remember, I'm always taking my signals off the large contract. The little contract is just to show you the trades here. This was a sell condition. It wasn't quite 100% kosher, my trade, but this was a sell condition. This was a sell momentum trade to the downside. So we took that. So we start the session with our first 10 points in gold. It actually goes much more. And that was actually a very decent trade. So the reason I should have done the large contract, I'm just, showing you a lot of stuff, and I don't want to make execution errors while I'm talking. So this was a good trade from a whole bunch of reasons, and not the least of which is the fundamental reason. Now, Kathy is the fundamental queen, but you could see what I was telling you, that this was negative gold because data was much better than expected. So there's a lot of weight on gold. Now, the great thing about trading the way we do is we have an opinion. Who cares? Everybody has an opinion. Opinion is only valid if price confirms your opinion, right? And so one of the reasons why it's so interesting to trade my structure is I don't trade my opinion until the indicator confirms it. So in this particular case, it absolutely did confirm it, because we had a momentum sell signal here through the SMA. That gave us confidence that it was going to have further downside action against the fundamental background, and that's exactly what happened. So that that worked out really, really well as far as that goes. In the meantime, dollar yen showing zero remorse, going back up. So we're obviously laying off this trade. How's our Kiwi CAD trade doing? That also came off. So we made our money. We made our plus 10 on Kiwi CAD, and now the Canadian dollar is resuming its strength. I still maintain that the Canadian dollar. Well, we have a fundamentally. Let's go to dollar CAD situation here. Let me just pull up dollar CAD. We have a fundamentally dollar CAD bullish situation. So bullish situation that U.S. data was better, Canadian data was worse. Presumably, that means that dollar CAD should continue to rise, right? And dollar CAD, by the way, looks all bullish. We have buy signals all across the spectrum. So now we just have to wait for the fundamental for the price action to confirm our thesis, which means that what I really need to see here this is a 1 minute chart, obviously, is I need to see the price come back up above to give us a green candle. If I get a green candle in dollar CAD, it will definitely be worthwhile for us to look at it as a potential trade. It will also probably print this arrow. It will definitely print it at a higher level because we're at 25 and this is at 14 at the last one. So all of those things, yeah. Eric says, love what you said, Boris. Trade the price action, not opinions. Going to use this as my mantra to hold trades for longer. An issue I've had when I'm holding trades to TP. So here's dollar CAD. Again, I'm not trading FX because I said it's impossible to trade FX on my futures account. It's just just very very awkward. And you see, by the way, that the very, very important part of it is the key thing to the way we trade, very, very important in my triple R structure, is the candle has to close. Price action isn't giving you a signal until the candle closes. The price action's spending most of its time faking you out. Remember, markets are like a game of 3-card Monte. They want to trip you. They want to trip you into the wrong trade all the time. They want to reveal their cards until the last possible moment. That's how that's how you got to play the game. I'm sorry, guys. I'm scratching my nose because I'm still a little bit. I had a summer cold, so I'm still like a little sneezy. So it's not like it's not like I'm Hunter Biden sniffing crack cocaine. Just give me the benefit of the doubt, please. My only drug of choice is coffee, but I apologize for scratching my nose all the time. I know it looks ridiculous on air. Anyways, so the point is, with price action, has to actually reveal it to you. Price action has to reveal strength or reveal weakness to you before you commit. And then, of course, price action. If you have an opinion, you only express that opinion if the price action is confirming that opinion. If it doesn't, then it doesn't matter. It doesn't matter what you think, right? So, by the way, and interesting enough, that if you look at this, according to the indicator, dollar yen still remains in a sell condition. We haven't really changed to a buy condition here. So it'll be interesting to see, like, the next couple of minutes, was this a knee-jerk reaction and covering? And, is the market, irrespective of the relatively buoyant U.S. data, going to go down? So I'll make a very important argument for fundamentals, right? Because Kathy is the fundamental queen, and she's very successful at weaving the two together. But again, it always has to be a marriage of the two. I'll tell you why fundamentals are really good. So the gold trade is the prime example of why it's so valuable to have fundamentals on your side. By the way, interesting. All risk is starting to turn around. Even gold is starting to turn around. Gold is now in a buy mode, right? The reason why you want to have and this, by the way, fundamentals are only valuable when the surprise is massive. Remember, this was a surprise, but not a massive surprise, right? Like, everybody was looking 160, it came in like, I think 260, okay, or 290. It came in strong, but it's not a blowout number. It would have been like if it came in 350 to the upside or 0 to the downside, massive divergence for what the market was expecting. That's when it has lasting implication. If it has small variance from the expectation, it has fleeting implication, right? But even within the fleeting implication, if you have a structure, if it gives you a view and that view is being expressed in price action, then you have a lot of confidence expressing that view. So it's not just a very, very simple view of like, oh, none of them fundamentals matter or all fundamentals matter. The truth is very subtle and very much contingent on the case. It's very case dependent, right? And the bigger question, as I said, is how much of a variance is the fundamental data from the expectation? That's really what the market trades. Because if the market has already got factored in, at this expectation, they're not going to be that surprised. But a massive variance from expectation tends to have relatively long impact. That's why, by the way, you'll notice that, yes, fundamental data, that sort of hardcore quantitative data, sometimes can move markets. And when CPI was constantly printing hotter, remember how when CPI was printing hotter, the markets were really getting decimated because of higher inflation. But what really moves the markets, because this is the type of fundamental data that is absolutely impossible to predict ahead of time, is when policymakers, especially central bank chairman, will make a certain statement that is completely different from what the market expects. If they say, we thought we were thinking of, like right now, if the Fed says, we don't think there's any reason why interest rates need to be cut for the next year. They're never going to say it, but let's just say they say something of that nature. That will upend the markets like you can't believe, because human communication, which is obviously soft data versus hard data, much harder to anticipate, and therefore creates a much greater surprise. And the greatest surprise, the greater dislocation in price, the greater possibility for us to trade it. So that's how you weave in the fundamentals with the technicals and be able to kind of look at the chart in hopefully more of a 360-degree basis. So NASDAQ, remember I was saying to you, NASDAQ was positive, now NASDAQ turned negative. Look at this, NASDAQ turned negative on us. So that's it. So much for the positive. Trend is to the downside. We didn't take any of the upside moves, which was good for us. And now we're gonna have to just see how it develops. Let's see where the S&P is. The S&P is also sort of in a negative, basically in a negative trend over here. Basically in a negative trend, kind of showing weakness here. I may just trade another one. Let's just give this a shot here. I don't love this, but this is going to be a tiny little trade just to kind of trade I'm trading the negative move here. We're still in negative mode, negative momentum. Let's see if we can get a point over here. So target is 93.25 on the move here. Again, I'm trading tiny little amounts because, and there we go. To show you the trade, couple of very, very important things. This is a real account for me. I don't want to fuck around with it while I'm playing trader with you guys on YouTube. I know it's very exciting, and I certainly can go large and do all that stuff. Here's why I'm doing it small. Just to explain to you, this is not justification, just to explain to you. The single biggest way you lose money is when you lose control over size, right? You lose control over size. And there are several ways you lose control over size. One, you misdiagnose the trade. That happens, that's fine, right? But two, and a far more toxic way of doing it, is if you just force a trade because, hey, it looks okay. And because of size, it now impacts your P&L, greatly. When I'm trading with you guys, I'm keeping an eye on a million different things, right? And my margin for error, hitting the sell button versus the buy button, not being late to the trade, not doing that, not setting shit up, is massive, right? And I don't need the additional fuck ups to show you the trade. I'm showing you the trade because it doesn't matter whether I make $1 million on this trade or 1 penny. You haven't made $1, but if you learned how to use this trade, you will learn this trade forever, right? That's sort of like my approach to this. I have a little bit of a different approach than a lot of people who trade on YouTube and like to get their big swinging dick out there and tell you how much money they've made in live trading. I could do that as well. We could open up a $500,000 account. I could trade large accounts and do all that. And I'm sure that would be very impressive for some of you. But I'm really trying hard to actually teach you lifetime trading skills, not bullshit YouTube guru fake I'm going to rent a private plane to show you how fake rich I am trades. And I hope you guys appreciate that. So that's the reason. I'm trading tiny because I don't want to lose my focus. If I fuck up this trade, it doesn't matter to me on my account. But if I took a big trade, then I'll be mentally distracted, and that's going to affect my next setup, which I really want to show you. So I hope that makes sense for everybody, and I hope you guys understand that, right? Does that make sense to everybody? Anyways, trade 2 for 2, good trades. They did work pretty well. We're in good shape on that. Going back to just actually dollar yen. Don't have any. I'm actually curious because I was looking to see, we're still in sell mode. If you're sort of trading dollar yen under our conditions, a move to the downside here like that, down through this 87 would be an interesting signal for us. We need a red candle here because we're still in a sell mode, right? We're just now in the retrace. This is the second phase of our triple R trade. Trend, retrace, resumption. We haven't hit resumption yet, so I'm just kind of watching the resumption move of it here. Herc is asking another really good question. I'm going to repeat it in just 1 second. Let me just let's just cycle through what's going on over here. Nothing actually, frankly, is going on. So just a little bit of a summary where we're at. Dow is in sell mode. I could have taken the Dow was a great trade over here. I was watching the S&P, but the Dow, this was sell mode. Sell resumption would have been a nice clean trade right over here, done. S&P, we took the trade that was done. You can only do one at a time. NASDAQ is initiated a sell mode. So NASDAQ now is initiated a sell mode. What we're going to be looking for in NASDAQ is a move back up and a move back down as a completion of our triple R cycle. Trend, retrace, resumption. If we get resumption, then hopefully we get redemption, right? If we get resumption, hopefully we get redemption on the trade. So those are 3 things that we do. So Herc asked a really, really good question, and I have like a very unique answer to this, which I'm actually going to make a video on this because this is a method. This is not my idea. This is all the guys in our trading room, all the guys who trade with me and pass the prop. By the way, just let me see. Obi, I'm going to embarrass you. Let me go into our Discord. Let me show you our Discord. Where's my friend Obi? My friend Obi Wankanobi trades only gold. He's a maniac, and this is I think his 5th or 6th. I stopped counting at how many funded accounts he's able to do. But this was his just very latest one. He just got a $50,000 funded account. So if you're interested in this. This is he's part of my PTP program. But what's interesting about how, for example, Obi trades and a lot of other guys in the room trade is the following. And this is where Apex comes in. That it's really, really useful for anybody who wants to give it a shot. Everybody, and this is true by the way, even if you're trading with our friends at ACAP, a way to really trade well is actually to have. I'll just say 5. I think 5 is probably a good starting number. 5 separate accounts. And you may think, oh, that's crazy. But let me explain to you what everybody does and why I think you'll find it very interesting. So the way everybody trades, we call this account hopping. You make 3 trades in account 1. All 3 trades are winners. Let's say you have 2 trades winners. Great. I'm gonna make 1 more trade in this account 1. Boom, you're done. You move on to account 2, right? Then let's say account 2, all 3 trades are losers. You're like, oh, screw this, boom, you move on to account 3, and so on and so forth. Now, what does this do? Think about what this does. In aggregate, you're not doing anything differently. Like, your distribution of trades is kind of the same. But psychologically and financially, you're actually doing something incredibly, incredibly valuable. You are essentially in the account 1, keep letting your winners preserve. Because what is the single biggest issue we all have? We have a big winning streak, and then we give it all back, right? We make tons of money in the morning, and we give it all back in the afternoon. How many of you raise a hand? Give me a virtual hand. Until I see 5 hands, I'm not gonna keep going because I know you're lying if this never happened to you. Raise a hand, virtual hand with an emoji if you've ever made money in the morning, lost it in the afternoon, gave it all back. How many of you have done that? Five hands. Paul raised the hands for all of you on here. Yes. So the reason why that occurs is obviously we can't be always great. So what this does by account hopping is you capture the greatness in one account, you capture the ugliness. Now, the capturing the greatness is obvious. You have three winners, great. You've preserved your profits. You go on to the next one. The losing part of it is the most interesting part. How many of you have gotten into a losing streak and burnt the account to the ground because you're trying to revenge trade? Okay. If you haven't done that, you haven't traded. I mean, I could raise 100 trades for that because over the course of my career, I've done that a million times until I finally stopped doing it. So do you guys understand, right? So the single most toxic thing is we take one losing trade and turn it into a losing account. And the reason we do that is just psychology. We can't help ourselves. We cannot help ourselves. There's nothing you will ever do. Well, I have gotten myself trained to a point where maybe I have enough discipline now not to burn my accounts to the ground on a losing trade. I'll tell you, what I've done that kind of really improved my P&L. But, I'll be honest with you, it's an incredibly long road to hoe to kind of not want to revenge trade and not want to kill your account from the ground up. So if you're three trades and on to the next one, the thing psychologically, humanly, is we can't let it go. If it's the same account, we can't let it go. We're going to just, strangle it to death until we win. But if we know there's a clean, fresh account, right? Clean, fresh account waiting for us, and we just move on to that fresh account, we can let that one be. And then the next day, when our mind is fresh, when our ability to read the market is fresh, selling on NASDAQ, by the way, what I got? Let me see if I get negative on NASDAQ. Shit, I'm late. I'm talking. Okay, let's see if I can get negative on NASDAQ. Just taking one more trade while I'm talking to you guys. Was saying, leave the bad alone, right? That's what allows you to do it. So you both keep your winners and you walk away from your losers. That's the value of account hopping. That's why a lot of guys in my room do this. It's a great technique, and it's far better than anything else I can tell you in terms of discipline and which is all bullshit. We all know how hard it is to control our own impulses, right? If you can control our own impulses, we'd all be perfect human beings. So you have to create these mental tricks, and it's a great mental trick. It's just a great mental trick on that side. Yeah. So that's sort of like my shorthand answer. Now, looks like this NASDAQ is always the hardest trade in the world to do. We'll see if I can survive this move. So NASDAQ is the one instrument, by the way, where we run into this very, very common problem. This is another reason, by the way, why I'm trading small, because it's not it just isn't going to affect me P&L wise much. NASDAQ is the one instrument where you could be right on direction but wrong on execution, and there's nothing you can do about it. What I mean by that is the volatility envelope of NASDAQ is very, like, NASDAQ can bounce up 10 against you before it goes 5 for you, and then it will go 5 for you in the next one. It will do this all the freaking time. NASDAQ is by far the most difficult beast to ride. It is a bronco that you really, that's very hard to buckle. So you have to be very patient with it. You can't get pissed at it. And you got to just, stay to your game plan with NASDAQ. It will eventually, yield to profit. It will eventually begin to create, interesting continuity. But it will, the first couple of times, it may buckle you off the trade. And you just have to understand that this is the one instrument. It's not. This is why I love trading the S&P. This is why I love trading the Dow, because the continuity in those, the difficulty of trend, the ease of trend. If we want to go the other way around, the ease of trend, in my opinion, on the instrument scale would go like this: S&P number one, S&P and Dow pretty much tied, for number one. Gold would be like a distant second, because gold is also difficult lately. And then NASDAQ would be by far the third. Now, there are guys in my room and ladies in my room who love NASDAQ, trade it well. They may trade it with a little bit different volatility parameters, so on and so forth. But it all depends on your approach, but also knowledge. So the whole point of trading is, every instrument is like every child is different. Even if you use the same parenting techniques, it's not going to work the same on every child, right? So you can't, even if you use the same setup on every instrument, it's not going to work the same on that instrument. So you have to know, you have to have your favorite child. My favorite child is the S&P. You have to, Obi's favorite child is gold. Like, he just does not fucking miss on gold. So you got to develop knowledge of the instrument as well as a knowledge of the technique. The technique is great, especially when you marry it with an instrument that you really, really like. Like, I always think to myself, Boris, if you just traded S&P and didn't do anything else, you'd do great. But everybody wants more trades. You guys, and I want to show you as many entry techniques as possible during our live trading, in order to get you to understand how to hit the stroke. Right. My whole job is to teach you how to hit the tennis stroke, how to hit the forehand, so you can then hit the forehand yourself. So that's why I do multiple trades. But honestly, if I had my druthers and I was just sitting in my own little bunker, I'd just be doing nothing but trading the S&P, because that's my little baby. But it may not be yours. Just understand that there are different things in terms of which instrument works which way, which way properly. So what time is it? 9:01. We still got about half an hour to the open. Let me. I'm just curious to see where the. I was talking. So just to kind of show you, 95 would have been a decent entry on. So let's say we're trading FX in the same structure. Remember, I said 95 is we're still in the sell mode. Oh, looks like did we get it? Did we get it done? What happened to me? Oh, we got done. After all my tortured explanation of how much I made Nasdaq, we're actually 340 right now, in terms of our trades. So very good. Okay, so here's dollar yen in terms of understanding my structure. Signal would have been around 95. It would have given us, it almost came 10 points, right? So if you sort of holding this trade using this indicator, you're close to having 10 pips on this move. I think it probably is reasonable that we'll probably go down a little bit more. But if I'm trading FX, I'm in at 95. I probably take half at 5, and then let the rest ride. But it's just a good example of how. Although now we're turning it into buy mode. So now I would just close the trade, because once I switched. Let me stop myself here. It needs to close on a buy mode. Yeah, I probably would close the trade now. Fine. Because now the whole approach of the market is kind of changed, right? It's turning into a buy mode. The market is looking at the fact that where's the U.S. yield structure? U.S. yields are down a lot. They're actually down. The 2 years are down a percent. So there's not support for dollar yen to the upside, but it doesn't matter. The price action is not cooperating. So I'm just going to wait for the price action to either cooperate or I'm going to stand down. And what does this tell me now? Is this just stand down? You had your shot. You made like about 5-7 pips. That was it on the FX side. How are we doing on the caddy side? It's interesting. So here we go. Kiwi CAD. Remember, so this is a good example of where I want to again apply my fundamental approach. So I'm bullish Kiwi CAD, right? CAD is negative. We made money on this move for plus 10. Now we have a signal here at 43, right? So 40, you came in at, 48. Hard to see it. It's 48. So now I'm basically long 48. And now you're just, you're trying to see if this cross can get itself back up towards, this could be a very slow, ponderous little trade, but not a bad one. Like I'm happy to be long here 48s to see if, within the next hour or so, we can revisit this trade if we get up to 55, 58, using, all my techniques. This is all higher lows. We're in a buy zone. The fundamentals are our way because the data in Canada really sucks. And we're just trading, the weakness of the Canadian cross. So, it's working. It's fine. I didn't even look at dollar CAD. Dollar CAD is still in sell mode. Really nothing here that we want to do. Sometimes, and this is the interesting thing, when you're trading non-US data, this is a trick that Kathy does very well. She's not here today, but obviously I'm just teaching you some of her tricks. She loves to express fundamental news on the crosses, because once you strip the dollar away, you get the true flows. You get the true capital flows in and out of currencies that are favored or unfavored. And clearly, Canada is unfavored relative to Kiwi now because of its weakness in the employment front. Yes, I absolutely always wait for the close of the candle. If you don't wait for the close of the candle, you don't have a trade. It's a fake out. Yeah. Okay, some funny comments from you guys on all of this. Okay, let me put the Apex link in here so you guys make sure you get the Apex ideas, and let's go back to where we're at here on. So, by the way, another good signal in the Dow. I'm kind of ignoring the Dow just because we've been focusing on NASDAQ. I can only do one thing at a time, and this is another thing that I think is really valuable. And we have a little bit of time, so I can actually show you. Sorry, guys, just need a little drink. I can show you sort of some interesting changes in how I trade that have really made a big difference in this particular. Let me see if I can go in here. I'm going to try to go into my TradeAbit account, see if I can share with you the. No, what's this? Where am I? Why isn't this letting me log in? Here we go. Okay. Come on, baby. What I want to show you is the general P&L of this account, because I want to show you something interesting. I want to go, let's just say this week, right? Let's just do this week. Okay. So, and I wanted you to focus, it's maybe a little bit hard to see it on the screen, but I want you to focus on this cumulative with fees, because that's actually the real P&L, because that's what commissions included. So just to understand, if you are trading Apex Prop, our favorite prop firm, on a $50,000 account, which is what I just trade, the basic, plain vanilla account. The rules are you got to make $3,000 and you can't lose more than $2,500, right? Pretty equidistant, really nice R&R ratio, right? Like a really pretty favorable ratio, right? So what that's telling me is I have a $2,500 loss budget, right? And what you'll notice about this account is, it's slowly, obviously, accreting up and up and up. But more importantly, you see that the losses in this account are very contained, very, very contained. Like, I think the worst loss I had here was, well, this is just this week. This is this week, but it's just 4,022. It's basically about $300, right? So like peak to trough is like a $300. Remember, I have $2,500 peak to trough, and my worst, structure was around $300, right? So the question is, how? What did I do different? What am I doing differently in this particular account than in some of the other accounts that I've had where I've had much larger drawdowns? Or rather, the better question is, why is my drawdown so tight? Right? Why is my drawdown so tight? Let's ignore my P&L. Let's just look at my, at my drawdown so tight. This is, by the way, if you want to see my total P&L, it's probably, let's just do this. Custom range. I think I started this somewhere like mid-June. Let's go here. So, I'm $1,400. I need about, I'm halfway there. I'm trying to get myself to 75-25 instead of 70-20. My break even is 66. So, I'm obviously positive, but I really want to get to myself to 75. And using all of these techniques, I think, you see me doing well. And again, you can see that, my peak drawdown here is maybe $300-400. So how is, what is the single one difference? What is the one difference I did in keeping my drawdown tight? Let's see if you guys can answer that in the question. How am I able to keep my drawdown tight? Who wants to? And this is applicable whether you're trading prop or trading your own account. Anybody want to guess? Anybody want to? Let's see some suggestions. And you know what? You know what else I want to do here? I wonder if I can do polls. Perfect entry. Definitely not perfect entry. Absolutely not perfect entry. And definitely not trading NQ. These are all good suggestions, but none of them are correct. But go ahead, keep going, guys. Trade small but churn frequent trades. The FX crypto is the closest in kind of getting to the truth of what I've been doing. Hang on, guys, just bear with me. Just bear with me. I want to get into my, okay, here we go. Let me see if I can do, sorry, I just want to do a couple of polls here. How do we do polls? Okay, here we go. Yeah, we're going to do a poll. Because what I want to ask you is, here's a question. Have you ever blown an account? Either prop or personal. Either one. Doesn't matter. I'm going to put this up. I'm going to start the poll because I'm actually really curious. Answer that question for me while I explain to you. Risk ratios, none of that is working. But Connor's is also relatively close. The reason I keep my drawdown budget so tight, it's tough, I'll admit to you, but it definitely works. I refuse to double up on losses. So if I have a losing trade, I'm a 1 to 2 risk reward trader. So, by very definition, I lose 2 to win 1. That's what you need to do when you're trading scalping. That's how you get the 70% accuracy, and that's how you try to go to 75%. There's no other way. But when you lose, what I force myself to do, painful as it is to work my way back to break even. If it takes me 3 trades, if it takes me 4 trades, if it takes me 5 trades, if it takes me a day, if it takes me 2 fucking days to do it, I will do it this way. I adamantly refused to increase size to wash away prior losses, right? That has been the single greatest difference in containing my drawdown to a very, very tight level. Now, I am at 10% of my budget. So am I being uber conservative? Yes. But that's not the point. The point is to be able to really, really adhere to that behavior so that it becomes almost secondhand to you when you're trading prop, right? Holy cow. Look at this poll, guys. Holy cow. What are the results? No, I don't want to end the poll. 94% have blown either a prop account or a personal account, right? So this is, in my opinion, I got 913. Let's just go MYM. We're going to take this again. Let's take this on the short side. Short. Okay. I'm short. This is Dow signal over here. You see this Dow signal over here on the, it's a sell 8. It's a pretty mature, sell condition. And, and I may eat it on this one. And also, it's 15 minutes before the open, something I really don't like trading. But again, I'm just trying to show you what I'm trying to do as far as trend conditions, which is the prior sell was 660. The current sell is 657. It's a lower sell. It's a momentum signal for us to the downside. What's my target on this thing? 49 target, 79 stop. Let's see if it works. It may retrace. It's also very mature, usually beyond 6 or 7. I don't like to take the trades because it means the trend is very mature. But we had this, big hump of the NFP in between. We'll see if the conditions hold. So I think a 49 is 49 is my target. We'll see if that works out. Anyways, that's been the single greatest difference in controlling my drawdown. Hopefully you guys will find that interesting. Hopefully you find that interesting. Okay. So wow, that's the poll is getting doesn't even change 93 to 7. That's fascinating. And I'm there. I'm in the 93 percentile. I think the 7 percentile. I'd love to know how you guys have managed not to blow stuff up, but it's very impressive. But that has been the one. Why do you not trade market instead of sell? Oh, Zippy, the reason I trade market instead of sell or buy limit is just because of the limitation of the platform. Okay, if you're trading, again, in everything in life, there's a cost and a benefit. Trading View, as you can see, this is a proprietary indicator that we made, right? That I made for everybody in our room. It is super good at helping me put me into good trades, right? However, in order to trade it, if I want to trade it, I got to trade through Trading View. Trading View, as we all know, is the world's most beautiful charting platform and the world's biggest ass as far as trading goes. All you can do on Trading View is just simply go take profit and stuff. If you want to do quick, remember, I snooze, I lose. In my business, you're in or you're dead, right? It is a scalping business. It's a sniper business. You don't react, you're dead. So I don't have the luxury of going, buy to bid, sell to ask like I would the Ninja Trader or somewhere else, right? And that deficiency is far smaller than the benefit of having my ability to be able to trade through the chart, my ability to time it. So that's the answer. It's not that I don't want to, it's that I can't, and I don't care. That's the bottom line to do this, right? Since prop firms are not regulated, how do I feel about prop firm suddenly goes out of business? Then you lose your capital. No, you don't lose your capital, my friend. You don't lose. This is the whole thing. So let's take your worst case scenario, right? And this is why I'm very, very bullish on prop. And by the way, those of you I'm going to put this in the link. Oh, I wish I had this. Oh, damn, I wish I had the link. Let me see. Do I? We started a free newsletter for everybody called Prop. Oh, looks like we got done on the. We got done on my YM. So now I think we're 4 for 4, right? See, I'm focusing on the trades. I'm bullshitting with you guys, but I'm focusing on the trades. I'm trading them small, so my mind is doesn't give a shit about. I'm just focusing on trades. I'm not focusing on capital. And you see how better I'm executing. And this is like, when I'm trading live with you, this is what I'm trying to do. And you can see how both my mental state and my analytical state is in a good place because I've set myself up for success for teaching you. I'm not looking. Had I been sitting here by myself, I would have been up $300 for the day. Fine, great. I'll when I go off camera and I'll trade myself for another hour, I'll get that money that way. It's fine. It just, this is what I'm talking about, how trading is such both a mind and a psychological game. And you have to have both in sync to be able to do this. So anyways, back to the prop. My friends at Apex have paid out $200 million worth of money. So they're not going bust. But let's just take this, the hypothetical example that, I have an Apex account. They went bust. What's my loss? The $35 that I paid them for the evaluation? That's my loss. That's my only loss to this thing, right? In the meantime, for the next 2 years, if they're paying me thousands upon thousands of dollars of payouts, that's my gain. That's the great advantage. The worst thing that happens in prop, it's not your capital that you're losing, it's their capital that you're not getting, right? Whereas if you're with an unregulated broker, then that's, the danger is that you lose your own money. That's why we recommend, my friends at 8cap. And by the way, hang on a second. I don't have the link. Just bear with me a second, guys. I want this link. I'm going to give you this link. If you want everything I'm doing for free, totally for free, right? 100% free, access to all of my tools, access to what is this crap? Okay, I think this is the right link. I don't know. I got this link from ACAP, and I just realized that it's kind of a weird link. Anyways, I'll next time I see you guys, I'll put the ACAP link in there. If you want everything for free, our friends at ACAP completely subsidize our whole service. So all you need to do is you open an account with them. If you're a non-US citizen, the only other problem is you can't be a US citizen to open an account with them. But if you're Canadian, if you live anywhere else in the world, that's basically OECD, you can absolutely open up an account with them. And everything I tell you, everything I give you, everything I teach you is all free. Like there's no fees, unlike with this stuff. So anybody who's got to see how many, let's do another poll. This is a cool poll. Let's do another poll. Okay, so we'll end this poll. Oh, look at this. The poll has kind of increased. I'm actually curious. Let's do another poll here. This is what I want to ask you guys. Tell me. Yeah, it's what I'm curious about is who trades CFDs / forex, who trades futures. Oops, sorry, futures. What do you trade? I'm actually really curious on this. Please answer this question because I'd like to know where you guys are all coming from and how you guys are doing. That'd be really valuable for us for the future. So answer that question. So anyways, Connors, does that answer your question? That no, you don't lose your capital. You just lose your entry fee. Who gives a shit? I'd lose 1,000 of them, and I still won't blow up anything. Okay, if you guys are trading both, then choose CFDs. What I'm just curious about is who has the access to CFDs, because if you're saying futures, you just don't have access to CFDs. I guess that's the better question. Better question to it. Times at 22, 8 minutes to the open. Let's see how the markets go. But are you guys loving the the higher lows? I mean, the labeling really makes it easy to trade trend, right? Like this was a really good setup. This was a pretty decent setup for us, to the downside. Now we're starting to flip around. How's the S&P? S&P is kind of flat out. This was a great setup to the downside. Now we're sell label 6. Let's see how the markets open up on the thing. Yes, we love Apex for U.S. clients. Absolutely. It's an American company, baby. It's American. They're in Texas. They're down home American. No, they're great. They're out of Dallas. I love them. Yeah, a lot of platforms are open to the U.S. And we can, one of these days we'll talk a little bit about we'll talk a little bit about the difference between forex prop firms and futures prop firms. There's like a lot of interesting, I think, differences between the two. You can't see a difference between indices and futures. Am I doing something wrong? Why is dollar Swiss dropping against Swissy? Good question, man. I don't know. I was long dollar Swiss. I got my head handed to me also. I think it's because honestly, U.S. yields are getting clobbered here, right? And dollar yen not expressing it, but dollar Swiss is expressing it. I think it's it's more that euro is up nicely, pound is up nicely on the move. Oh, hey, our friend Kiwi Cat. Remember I said to you, look at this, guys. Remember I said to you, we're at 48. I like this trade at 48. We hit our target, right? Hey, and that's the beauty of it. So again, I'm going to make this offer to everybody. If you're trading forex, you're obviously going to trade it with like ACAP, right? And this works on forex as well as it works on indices. I mean, I spend all my day, trading prop on indices, but there's no reason why you guys can't trade this on forex using these indicators. Just open the account with ACAP. Open the account with ACAP, and we'll work out a deal where the simple rule is, if you drop $5,000, or if you already have an account with ACAPs, just top it up with $5,000. I will give you 6 months of all of this for free. If you want to trade forex, and I know so many of you guys trade forex, so I'm actually curious. Let's see the CFDC. 3/4 of you, or 2/3 of you, are CFD futures traders. All of you could totally benefit from this, not just from obviously trading forex, but of course you can use this on NASDAQ CFDs and US 30 CFDs. It works the exact same way on US 30 as it does on YM futures, right? Same stuff. Like, let me just sort of show you. Let's go to the US 30 CFD, right? See, look at this. Same signals, same P&Ls. Probably much better P&Ls because you can do much larger size on that. But yeah, same shit. So 2/3 of you guys are doing CFDs. Please sign up for ACAP. You sign up 5,000, you get 6 months of all of this totally for free with me, and I'd love to do it. And this is just the frankly scratching the surface. I have a couple of other really interesting indicators that we use that I just haven't. I'm focusing everybody on one single scalping strategy here in live trading. That when we do with ourselves, they're going to be really, really cool. I'm very excited to roll them out in our private room. What firm do I recommend for a U.S. trader? You mean as a brokerage firm? We don't really have any relationship with any U.S. firm. There's only, frankly, the answer is Oanda is the only company that that allows U.S. traders to trade forex. I mean, there's a couple of others, but they're the biggest. If you're Ryan, you're in Canada, you sign up for ACAP. How do you get the stuff? Very, very simple. You guys sign up with ACAP. You send me an email. Let me just put my email address: contact@bktraders.com. Just show me your deposit. We'll set you up. Or just tell me your email. You just email me. Tell me your email address. We'll confirm with ACAP, and we'll set you up. Super simple. It takes 10 minutes once I hear from you and you have verification that you drop the money in. It takes 10 minutes for me to set you up, and I'll do it. Okay. I know we all need Canadian passports. Just you can thank the SEC. Yeah, you have to fund the account. Yes, I mean, it's free because we want you to trade through ACAP, my friend. It's not. Yes. So as I said, $5,000 will get you 6 months. Yeah, I mean, if you're trading FX, 5,000 is kind of like starting size for most people, right? I'm actually curious. Oh, let's do one more poll, guys. Okay, I'm going to end this poll. So this is what I'm interested in. Okay, this is what I'm interested in because this is another really interesting thing I'd like to find out from you guys. Let's do one more poll. Okay. So start a poll. How big is your trading account? Now, this is obviously focused to people who have trading accounts. If you have just a prop account, just ignore this poll. And I'm going to say less than 5,000. All I really want to know is less than 5,000 or more than 5,000. Okay, greater than. Fuck yeah, greater than 5,000. Jesus Christ. God help me with less than or bigger than. So answer that because I'm curious on that because that will help us with the stuff. Okay. Is there any questions I'm missing here? Canada, blah, blah, blah. Karen, okay, all good. All right, we got 929, market rolling. Let's go look. Let's go see what we got. So this is CFDs. We're going to go back to futures. Let's see what the markets are doing. So far, it's been really, really good. I've been nailing all these trades. So where am I? I have, with sell 9 in the Dow. That's generally gives me pause, because it means that there's a possibility here that we have a flip to the upside. And actually, let me take a look at the S&P. The S&P is also big. You know what? We're going to get long this thing again. I'm just going to take, damn it. I'm late. Okay. So I'm long this. This is not a trend trade. This is a reversal trade. And this is just me putzing around. And this is, I'm probably going to pay the price. So look at me. I'm probably going to pay the price. This is why you don't fool with Mother Nature. You try to trade it. Yeah. I am an inveterate reversal trader. I love to pick tops and pick bottoms. And, in this particular case, we opened up. I still think I'm actually going to go back in again. If this thing stays positive, if it doesn't end up red, I'm going to go in the next green candle here, because this looked like it was right trade, wrong execution. Let me just hold on to this for 1 second. But again, this is like do as I say, not as I do. I'm trading reversals here, and I'll explain to you like why I love to trade reversals and just my own personal. Okay, so I'm long here. Now I'm long. Let's see if I pick my reversal properly here. And the reversal work. This was clearly, I was just early in the trade. Why, in addition to trading trend, right? By the way, I just got very lucky here. In addition to trading trend, this particular indicator can also be traded as a reversal indicator. Now, the way it's traded as a reversal indicator is generally when we're like past level 7, level 8, level 10. So, we had 10 downward moves, downward spikes, on the trend. And now we're starting to see the first turn to the upside, right? First turn to the upside. In this case, this was the buy label over here. I got long here. It just simply stopped me out on volatility, but it clearly wants to go back, right? If I had traded, the Dow, trading the Dow here, by the way, this would have still given me another trend trade if I had just simply stuck to my trend conditions. But my own personal bad habit is I like to trade reversals. But if you're going to trade reversals, you have to do them, first of all, in a mature trend. Like I don't even start looking at a reversal until I got an 8 or 9 or 10, label on the trend. And then I'm looking for a move back up. I'm looking for a green candle, right? On a reversal candle. But very often reversals fake you out. Like reversals will, it'll be a fake reversal and, you get clipped out. We all love to do the V-shaped trade, buy the reversal and it just it goes the other way. That's why I'm always a sucker for it. But you have to understand that's a weaker trade. And that's what, that's not what we trade continuously. And you can see also, of course, how much more successful my trend trades were. My trend trades were 5-0 today or 6-0. My reversal was 1-1, So that's, it's a good lesson for everybody to, David is asking, a couple of really interesting questions here. Oh, there's a lot of questions here. Okay. Okay. It's like let me read some of the comments here. Philip Spencer Walters. I am working 9 to 5 now. Philip Spencer Walters, 9 to 5, New York, 9 to 5 Europe. Where are you? Because I'm happy to answer that question, but I need to orient. He says, can I join, the Prop Trading Academy? And, does it make sense? Clarify to me. So this is a really good question, actually, of like, if I want to trade prop and I have a real job, what are the best hours? Virginia. So East Coast time, right? East Coast time, Virginia, right? What are the best hours to trade, right? What are the best hours to trade the market? Well, by far the best hours to trade the market, if you are scalping, U.S. equity futures, would be 10 o'clock in the morning till 12 noon, right? But if you're in the U.S., that's a shitty time if you're working. If you're in Europe or if you're in Asia, that's a great time. If you're in Asia, that's like, your evening time. So if you're in the U.S. and you're like an East Coast time and you're working, the only viable time for you to trade the market on a scalp basis. By the way, look at this. We have a I'm gonna do my terrible habit here. Hang on a second. I'm looking to see if this thing holds. Hang on. Again, I'm doing a reversal trade, guys. I'm just fucking around. It doesn't even hold, so it doesn't matter. Okay, let's see. I'm just, again, this is do as I don't do as I do as I say number. So 48 seconds. I'm looking to see if this Dow pops back up. Also, by the way, does the S&P pop back up? See, the S&P is actually a better trade. Let's do the S&P. The S&P already gave me a signal. Oh, come on, baby, come on. I'm late. Okay. All right. I'm just putzing around here on the S&P, trying to do a reversal. This is actually now not even a reversal trade at this point. It's now becomes a continuity trade. After this level 2 mark, we're actually effectively in a buy trend in the S&P, and I should be looking for buy conditions, right? For buy trades. But again, I'm too early to jump in on this thing. Let's see if I can survive this. This may reach. This again may be one of my. Let's see if I have enough strength here. Let's go to the DOM. So 95 is my exit. I'm in at 94.25. Let's see if this thing works. So to properly trade this reversal trade, this trend trade, right? What I would need to do, excuse me, we need to see a red and a green, right? We haven't had the retrace mode. I just kind of I sort of jumped on this as kind of a reversal trade from this long sell-off, right? And just jumped the gun as I tend to always do. I'm always love to trade too early, and everybody knows that that's my biggest weakness on these trades. But to be fully disciplined into a fully proper approach, I need to see a red, then green. Then we have a true, turn in trade on the market. You see, by the way, that the Dow has not given us a turn trade here. It's actually still a continuity trend trade here. Now this already made trend trade, so we don't have any fresh trade. We have no fresh label here, so there's no fresh trade. You can always trade micro lots. Okay, sorry. So, anyways, back to prime time. Yes, if you're in the East Coast time and you're working kind of hard, unless you can take a couple of hours off on the scalp basis. But in addition to what I was going to say is, in addition to just trading, pure scalp ideas, we also have what I call one shot, one kill trades, which is just one single trade. I think this looks like I got lucky on my S&P here, guys. Did I get my lucky on my S&P? Look at this. I got lucky on my buy trade. So good. That got done. That got done on the quasi reversal trade. Anyways, my point is, best times to trade the market outside of 9 to 5 U.S. hours would be 6 in the morning till about 8:30 in the morning. There's still plenty of opportunities there, and not a bad time around 8 at night till about 10 at night. So early Asia and basically morning Europe, early New York, right? Now, if you're like, I'm not getting up this early, you don't have to get up early, but you can trade Asia, you can scalp. Now, if you are just completely busy 9 to 5, as I said, this is a scalping strategy. We do lots of small trades to have a consistent profit. We also have a strategy in my room that we teach where it's called one shot, one kill, where it's just one trade in the Dow, one trade in NASDAQ, one trade in the S&P, or one trade in gold. So 4 possible conditions, just one trade per day to affect the trade. And that's designed really for people who don't have a lot of time to scalp around. But for everybody else around the world, like U.S. hours are awesome. You're chilling in Hong Kong, you're chilling in Asia, you're chilling in Australia. It's definitely off hours for you when it's on hours for us, and you're able to just trade 2 hours a day after dinner or during dinner, and you're killing it. Like I have a lot of non-U.S. customers that love to trade this. So yeah, definitely the case. Okay, there's a couple of other things. Oh, somebody's asking me about why am I trading with a 1 to 2 versus 2 to 2. Well, I'd love to trade with 2 to 2, my friend, but the market is never kind. The market doesn't give you $2 for every $2 you bet. The market is not generous. The biggest lie in the world that people tell you is they trade with a positive risk reward ratio and a positive winning percentage, right? I guarantee you, I will pay $1 million to anybody who proves me wrong on this, right? And with one caveat that it can't be like one sample trade. You got to show me 100 trades with this following condition, and it's got to be 100 trades in 100 days. If you can give me 100 trades in 100 days where you have a 70% win ratio and you risk $1 to make $2, right? I will give you $1 million, and I'm happy to pay that out because it will never happen to anybody else. The single biggest lie, if you're ever listening to a podcast, if you're ever watching a YouTube video, if you're ever watching any bullshit setup that anybody who's telling you, who doesn't trade live with you, who doesn't show you real market prices, real price action, is when they say to you, "Oh yeah, I trade a lot, and I'm always trading with a 1 to 2 risk reward ratio, and I'm hitting 70% of my trades all the time." Do you know why that's impossible? Because if you actually run the numbers on that type of a P&L, you'd own the market within a couple of months. You'd really own the market because you're literally guaranteed to win all the time. Huge. So the point being is, in real life, there are no guarantees. There are only prices you must be willing to pay. And if you want a 70% winning percentage, you must be willing the price of 1 to 2 risk reward ratio. That's how the market works. The market doesn't give you too many opportunities. It's not there for the taking. So that's the answer. Because if I did a 2 to 2, my ratio would, I don't think I'd be 50% accurate. That's how complex systems work. They're not linear. They're exponential. A tiny positive change in your direction can have massive negative impact on your P&L. Because you're too much of a greedy fuck, basically. That's how it comes down to. So there's my advanced mathematical description of all of this. Adam says he finds Friday is the worst day to trade. My stats are horrible. What works for me during the week? Great. There's a lot of people who agree with you. Friday is generally like a horrible day to trade. Although I got to tell you, ever since I really refined the triple R strategy, Friday has been right, guys. I mean, every chime in, guys. Tell me that this is not, we're not doing so much. We used to suck on Fridays, absolutely. Like the fact that I'm 6-0 on today is a fucking miracle. I totally agree with you that Fridays are terrible days to trade, but this particular setup, which keeps me on trend, has really helped us even that out. But you're absolutely right. Tuesday through Thursday is the best days to trade. You can use your cell phone to take trades. It's totally possible to trade using this indicator, using Apex on your cell phone. All possible. You just need to set it all up. But you got to be. I'm just not sure. I have to be honest with you. I believe it's possible, but you guys correct me if I'm wrong. Is it possible if you're using the cell phone, right? Anyway, can we preset the take profit and stop like this on the cell phone like that? Because the most important thing is you need a OCO, you need an OCO wrapper. You need a take profit and a stop on every trade you take, because that is very, very important in our structure. I'm not sure you can do that on the phone like that, but maybe you can. Correct me if I'm wrong. That's the only drawback. But if you can do it on the phone, everything else is connectable, including the indicator. You can watch the indicator on the phone totally. Somebody told me the other day that where it's really, really great is TradingView has an app on the iPad, right? And on the iPad, it's really, really beautiful. I think on the iPad, I'm actually sure that if you're trading the TradingView app, you could have this whole layout like this and just trade it like that. So yeah, it's totally possible. Andy says Dow worked out really, really well. Scott has asked me about my CNBC. CNBC has me under a contract. Yes, I have golden handcuffs. That's why you'll never see me on Fox. Yes, so they do have they keep me under a contract. That's why you always see me on there and not anywhere else. What's the best time for scalping U.S. equity futures? Eastern, 10 a.m. to noon. 10 a.m. to noon is money. is the honey money hour. And frankly, 10 a.m. to 2 p.m. is sometimes a really, really good time to trade. I really, that whole area, I wish myself I could trade those hours more. I just, the boss keeps me, doing a million other things, but those are just money hours. Those are really, really good hours to trade. Okay. All right, guys, I'm going to put, a couple of more, again, link to Apex, our friends at Apex, link to Pass the Prop, if you want to come join me. And I will make next time I see you guys, I'll make a proper link to ACAP. But here's the ACAP. The ACAP link is up there. And if you're really interested, as I said to you, it looks like 2/3 of you have a CFD account. If you have a CFD account, you can get everything I do for free. Just think about this: 6 months of me, whether you like me or not like me, you can get me free. Look at this nice sell-off in the S&P. You tried for literally no risk at all, right? You have the account. Just use that account to get subsidized and get BK services. So this is just for non-US customers I'm talking to, but for the 66% of you who have a CFD account, you are fully eligible to get everything I have for free. So email me if you have any questions. I'll be happy to set it up. Otherwise, everybody trade prop. Everybody trade prop a lot. Everybody have a good time. And do we have data? What's 9:45? Did something come out? Let's see if there's, or it was just simply the market just doing its usual bullshit thing. No, nothing, right? I thought maybe somebody was speaking. No, it's just the usual stuff. Now, again, today, I think we're closing early. I'm not sure if we're closing early, but we probably, for all intents and purposes, we'll be closing early. It was a very weird day because we had holiday yesterday. Everybody came back. We traded the NFPs. They weren't a massive surprise either way. It's not a huge shock to the market. How much more continuity either way we get here, it's going to be very questionable. So my recommendation, we did great today. We hit 6-0 on our trend trades. We even did 2-1 on our reversal trades. We did wonderful. I'm very, very happy with the new version of the indicator. I'm going to share it with everybody in my room the moment I get off air, so you guys can get the full new version. And those of you who want to come join me. But otherwise, everybody just enjoy the weekend. I think we did a good job. I am back live Tuesday, Wednesday, back live. I'll post the new links up there. Come join us. We'll do more of this in bigger and better size. Okay. Everybody have a wonderful weekend. Any final questions? Anything else that I need to know? Simple scalper works really well 1 to 4 p.m. But as I said, the better time is like 10 to 2 p.m. That's sort of like a perfect time to do this. Yeah, absolutely. All right, guys. So I'm gonna grill. I'll post on my Twitter the grilling for the weekend, because I have lots of people coming tomorrow, and I will be displaying my better skills, my grilling skills versus my scalping skills. So watch my Twitter feed on that. My Twitter feed is FX Flow, by the way, if you want to follow me, if you're not following me. Otherwise, I'll see everybody next week. Everybody have a wonderful, wonderful weekend. Enjoy yourselves, guys. Take care.